Hello, Warriors. How's everyone doing on Eclipse Day? Michael, Ryan, how are you? K-Man, Patrick, Sinatra.
Good morning, Coach.
Hey, how are you?
I'm actually going to be driving to pick up my son from the airport during the eclipse. Like we
Well,
have an hour viewing time here in where I live, and I'm going to be on the road, which is going to be interesting. So,
you're not in totality, are you?
no, 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 none of
Yeah.
us are, but it doesn't,
Well,
even if you're
some
not
of
in
the country.
totality, you're still going to see, it's still going to be weird looking outside,
Yeah.
how it is when you get an
I think
eclipse. It's
it's
going to
like
be that.
30% or something here.
Yeah,
So, yeah,
I'm sure I'll be with you.
I don't even think I'll notice it, but anyway, drive
It's already
safely.
started here, Dale.
Huh?
It's already started here. The sun's been eclipsed by cloud.
Okay. All right. So let's
That
see what
stinks.
markets are going to be eclipsed. Sorry. Okay. So you guys know that, well, a few weeks ago, I covered Apple puts down here. I thought we might get to back to 180, but after watching the trading action all last week, it just can't rally. The best it can do is hold. So that's not real bullish action. If all the market could do is hold after a breakdown, yeah, it makes you a little cynical. Like, you have a breakdown. Why isn't it following through? But I think all it would take is some type of sell-off in S&Ps, and I guess we're going to see if we could squeak out a new high in the S&Ps. It's possible, but anyway, so I rolled into June puts Friday near the close. So because I've been working this trade even before it topped, so I took some hits, and then once it topped, I've had some successful trades. In Apple, I don't want to miss the move to a minimum of 160, 150, 140. So I put some of that on. That's my eclipse trade. What's the most emotional market in the world? There it is. It's gold, it's silver, rallying right into the eclipse. So you may not want to short it, but certainly do not chase it here. Okay.
Look at Bitcoin.
Bitcoin at new highs, and the
It's
same with gold.
ripping. Yeah,
Same
I
with
mean, it
gold.
hasn't hit new highs, but it's getting there.
All right. Well, the gold and silver are eclipse candidates for me. I'll take a look at Bitcoin. Looks like, yeah, we're making a new high. Not yet. So,
No, yeah,
at
getting
new
close.
highs, yeah, new highs. Look at this. Don't chase Bitcoin either for the last, $5,000 to $10,000, whatever it has in it. This is pretty glaring, although we haven't made new highs. It's a 60 RSI compared to, when it was up here in the 80s, 85, 78. And on this move after this, what it's probably a wave four triangle, something like this. And Ellioticians will say wave four triangles are terminal formations with one more thrust. And that's the way I'd look at Bitcoin. And gosh, this week we get to see what's going to happen at 152 in the yen. So we're almost there. There's 9 pips away. Let's start off with Ryan. What's the BOJ? Are they going to try something? What do you think?
I asked the same question. Is today the day for 152?
Yeah.
Who knows? It's going to be an interesting watch. I'm doing nothing but watching this. I'm not trading this. If we tap it, do we knock out the stops? There's a ton of stops sitting above 152. Where do we jump to? Does it gap up to, I don't know, 153? Does the MOF then come in and spank it afterwards? Does it even hold still? There's so many questions. This is almost an interesting watch as the eclipse. I think this happens every 25 years as well. We get a move at 152. So
Yeah. How about that?
yeah,
It
the
is.
stars are aligning.
It sure be ironic if it blew through 52 and reversed. Anyway, within the next day or so.
Yeah,
Cable still looks kind of lousy to me, and now I thought Friday's action in the dollar was kind of crummy.
Yeah,
The way it came back, gave back most of its gains, but cable still looks heavy to me. You know, a new low would give us a 3, but that would be under here.
yeah.
You know, I still have some shorts on from 28, and I have my profit stop at 27, just in case it doesn't rally. But you know, I wasn't impressed with what the dollar did here, and especially with what yields are doing. I think we have a gap higher. We do. So
Yeah.
the 10-year yield actually gapped last night,
And the,
diverging a little bit. But
and the dollar's not
I
really
think,
following that either.
yeah, nothing has so far. The market has ignored it. Well, you know, we'll see. That could have been the high last week. Maybe we got a failing rally into the eclipse, but you know, this, I think we're talking at least, you know, the 50% level was 439. So 454 is 61.8. Not that far away from that.
No.
And TLT, I had this dot for a target for a long time here from when I was on Real Vision. Um, so 89 or so. It might be a good buy down here. You know, if you believe that this was A, right, and this is corrective of that advance, then you want to look for a spot to get long for maybe another one of these. And the only thing I could think of that would cause that, because it's a long end, I don't think it's going to be as Fed induced. Maybe the bonds will work like they used to. And if we get risk off to 4,800 in S&Ps, that the bonds hold, rally, just something else to consider. And then we have energy, don't we? So, you know, I've seen some guys that think that this rally is overdone. I don't know. This is another market that's rallied into the eclipse. So, yeah, anything that's been moving sharply higher into this zone, time zone, are possible fades, and anything moving down. Uh, what's been moving down? How about the peso? Peso's been moving down. I talked to a couple of friends of mine that got back from Mexico City. They said everyone's happy, and you know how much he loved it down there. You could take the train for a quarter up and down, you know, metro transportation, and that the people are happy. But it's really weird because Blake and I know someone that either was a member or trader that actually moved from Mexico to Europe, right, Blake? Because he was afraid of a left-leaning president in Mexico. Who would have thought they would have ended up with a bull market in their currency with a leftist leader? Um,
Yeah.
you know, but you know who I'm talking about, right?
No, I don't. I don't remember. I vaguely
Uh,
remember.
yeah, God, I forgot his name, but he used to be a member, and he moved. He took his family back to Europe. So anyway, that's what I see this morning, Warriors, and gold's already given it up. It was down 17 last night before this rally. You know, if you look at 4 hours, the weaker RSI structure, gold's diverging, but it's a bit above 70, while silver isn't. So maybe this, we at least get a pull back to the breakout level, which is where this 50-day moving average comes in at 26. That was the big level. But there's a 9-day at 26. Oh, and since I remembered the 9-day, it's important in the S&Ps on the weekly because that's really what held it. It's containing it here on the daily, but on the weekly, it's supporting it. And remember a few weeks ago, I was talking about the kind of advance that we're having here. It's like a grinding, um, small ranges. The ranges are getting a little more violent up here. But all it's going to take is one good down day to break this real tight, um, pretty high angle uptrend, and it will be broken, I believe, at 51.53 is a 9-day. So that's something it has to hold if it's going to make a new high. And those are my calls. The next one is yours, 800-899 bear. Because I didn't talk about buying anything, did I? Oh yeah, the bonds may be down there. So Ryan, you have a view. I know we have ECB this week. I'm going to be asking Mark Chandler about his outlook for it. Is that going to finally take us out of a range here?
Unfortunately, I doubt it, but hoping it gives us some volatility. You know, everyone's looking at June. This is a potential meeting for them to, you know, either cement that cut coming in June or to kick the can and say we're still waiting. So the market's going to move one way or another. There's still quite a few ECB doves still want to, you know, hint at strong language for cuts at this meeting. There were still few holdouts for the April meeting. So,
all right, Ryan, enough with the CNBC analysis. I knew you'd take it well. That's what people do when they go on CNBC when they don't know. They still, you know, find something to say. Anyway, you know how much time
long story short, it's a coin toss.
Yeah, there you go. But you know, we got to fill up your time.
Exactly. I'm watching. I'm looking at the clock here. You know, we're only 10 minutes in. I'm looking at the clock.
Maybe you know what? I bet K-Man has some comments about what to look for this week.
My microphone's cutting out now.
Hey, good morning, Dale. Good morning, everybody.
Anyway, thanks, Ryan, for making some things up. I appreciate your creativity.
See you later. Bye.
I'm kidding you. Anyway, hi, Kay. How are you, buddy?
How are you?
Good.
Yeah. Regarding the ECB, yeah, I think they may be a little bit dovish, but if they're not dovish, they may be a bit neutral and or a bit to the hawkish side. You know,
you're doing it too. All right.
Now you know what? I think it's supposed to be a nothing burger, the ECB this week. But you know, I mean, inflation is coming down, so and that's what I was saying actually on the Flow Show. She could do a J Powell, Lagarde, this week, because the inflation is coming off, but then on the other side, there's a bit of green shoots here and there in those PMIs. And this morning, the what was it? The German, although it were February data, the German industrial production was a bit up. So yeah, I think she's going to walk both sides of the aisle and try to be as neutral as possible.
She'll be a diplomat too, right?
Yeah, well, I mean,
if they do that,
they've all been calling for June. What does she want to say? I mean, she's not going to cut this week, so.
You know, we've been calling for June here in the States, and I don't know.
Yeah, 50-50 now. The June is 50-50, and it's starting to tilt even towards the less than 50% if you look at the short end as well.
Okay. Look at that.
Yeah. If you look at the 2 years, they're well above 2.5. No, they are above 2.5 cuts now. So they are closing in on the only 2 cuts level. 487 is the 2 cuts level, and 479 is where we are. So we are not really that far. Put US 02Y. US 02Y. There you go.
Okay, I should be watching them if you are. So, okay, let's look at them. Yeah.
Oh, you don't.
Similar formation, huh?
There they are. So,
you know, this looks like an ascending triangle, or it could even be a neckline.
Yeah,
and
we are on a bit of a level here at 480, but I don't think that it's really that important. The next one I think is 487, closer to 490. That's where we are going to be only pricing in 2 cuts, and that to me may be perhaps a little bit peaky unless we continue to have those world record breaking jobs data out of the US.
Well, the the formation from the bottom to where the 200-day is, which we're breaking out over the 200-day, could probably use that. Actually measures 530 back to the October highs.
Oh, 530 is where the Fed funds are. So that would be some move. And there's a quite decent auction offering bond offering this week in the auctions. And we do have the US CPI on Wednesday, so why not move closer to the 5% if everything remains sticky and the bond market wants Yellen to pay up for her money.
Hey, K-Man, good morning. By the way, I had a question for you. I'm assuming you're referencing the 30-year auction on Thursday.
There's many of them.
Yeah, I wanted to know if you did you find the because I couldn't over the weekend before the week ahead video, and I gave up because I had to run off and do other stuff. Do you know what the amount of liquidity that's hitting the market for the different maturities?
I mean, I've posted it already a couple of times in our room.
Oh, okay. All right. I haven't had a chance to. It was 4 in the morning, so I'm still
it's the expected
gathering
amounts.
my shit.
Let's put it that way. It is the expected amounts, but we have a bit of a spectrum there from the short end into the 3-year, 10-year, 30-year. It's all happening this week.
I think Rick Santelli last week gave one of the auctions actually an A+, which is an unusual grade for him on the bid to cover and everything. So
the prior ones,
yeah,
the prior one were actually pretty decently
bid to cover was good.
Yeah, they were rather decent, but there's always the risk of the drop that of water, that makes
the final snowflake that causes the avalanche. The last snowflake is a tipping point. Yeah. So, what do you see this week, Blake?
Everybody's gonna be
Aussie. Actually seems to be the one holding up the best. Still bearish Aussie.
I'm not, like I said on the week ahead video, I'm very neutral. I mean, even though I still think it's trading pretty heavy considering. I'm just not doing anything with it. I think the euro dollar is just consolidating in a nice triangle. Obviously the dollar yen sitting at 152. We're literally at 152. I got short some Swiss yen on Thursday or Friday, I believe on Friday, and which is great. And it would have done so much better. It would have done so much better if the dollar yen was sitting at 150, 150. But because it was sitting so close to 152 this morning, I had to pull the Swiss yen off from. It's unfortunate that I had to. But we also have the Swiss National Bank. Jordan, he's speaking this morning in 3 hours, I think. Exactly 3 hours. He should be speaking. So it's like I wanted to remove that off. And the dollar yen, you pointed out, Dale, and we've been waiting for it. I've been waiting for it with my tinfoil hat on today. A lot of crazy crap could happen. Why couldn't the dollar yen break 152 today during a lunar eclipse day? You know what I mean? These could be the days where things, break a little bit in different directions. So, that's the way I'm looking at it. And also I want to go back to what you were looking at was equities. Here, let me go ahead and I'll take over the charts. I know we only have 10 minutes anyway. But here's the S&P. Right. And we are, channel supports right at 5,100. This is the level where I think, everybody should be watching, 5,100. There's a low right there around 5,110. That's channel support as of right now. And if that breaks, that's when you might see things a little squirrely. But yeah, you look at these yen pairs, like here's the euro yen right up, not too far from highs. Sterling yen, Aussie yen, making its way higher towards those highs. even the Kiwi yen's rallying a little bit, Canadian yen, and like I said, I shorted Swiss yen. I literally top ticked that level. If you guys were in the chat room on Friday, I had an outstanding order to take advantage of that price, and I just closed it out just a little bit ago, because if the dollar yen takes out 152, this thing is going to just rip right back up again, and I didn't want to be stuck in that. So anyway, but you look at the dollar yen, Dale, and I think this is the setup we've been talking about. You start breaking above 152, and it's going to trigger some stops. I know you and Ryan mentioned it a little bit earlier, but K-Man, how likely is this going to happen today? What do you
I
think?
think taking it out is a very high percentage of likelihood, right? But what happens next is a very big question mark. I'm still long via my option, but I'm left. I left scattered offers because I think break it. The market made such a big thing out of it, and well, it has to, because we've tested it already 7, 8, 9 times or so. And also the officials are taking advantage of it to make a big thing apparently out of it. So because we had more people saying, even the union CEO said that this level of the yen is unwarranted. But I there's 3 different things that can happen when you trade such a big barriers. You fly through, you trade 153 straight away, and then you come back from it, or it trades 152.05, and then we trade 151 next. It's so many possibilities, and they can intervene. They really can intervene, because everybody's making such a big thing out of it. But if they don't, then we trade 154 before the end of the week. That's a fact.
Yeah, I mean, everybody's talking about the yen, and you're right. It's a big deal. So, it's something that we all need to be watching. And like I said, Dale, this is a crazy day, being a solar eclipse day that we've been looking for. That maybe this will be the day that you start to see that you see some weird things break. You want to talk about break, and I know I mentioned it to you earlier. You looked at the chart. Here is Bitcoin, and let's get over to Bitcoin really quick. I thought there it is. Here's that triangle that's breaking out to the upside. You can see that's cleared. Looks like we're going to hit new highs. This is the big breakout area. That's why it's highlighted. It's above 69,000. But Bitcoin looks pretty bullish. I mean, gold, silver, I mean, they look pretty damn strong, regardless. And I know you said don't chase them, and I agree, not chasing them, but this could also be one of those days that things, get a little nutty. Look at copper. I mean, copper's at the 88% retracement. This is a big breakout. Actually, one of the things we should probably look at, and let me just, this is, you guys know I post the week ahead videos, and every week ahead video, I throw out a chart that I think is critical for that, development for that week. This is a big breakout in the, I mean, look at the Thomson Reuters commodity index. This is one we talked about, not even getting back to a 38% retracement, and now we're breaking to the upside. I mean, look at how bullish this is. And you see, whether it's copper or, gold, silver, crude looks pretty crazy. And Dale, I know you pay attention to what's happening in the Middle East. What's going on with the geopolitical situation? Because didn't we get a little bit of Israel standing down a little bit over the weekend?
Waiting for a response to the attack, an Iranian response to the attack on the Iranian embassy in Syria. That's the big news, but I think they're trying to put together a hostage deal at the same time. So it's bipolar. The market would probably celebrate it. Gold would come off with some kind of ceasefire.
Yeah, I think so.
But then you also have the Iranians promising retaliation for what Israel did last week, and actually pointing the finger at us more than the Israelis. I don't think Biden approved that mission. That's the last thing he needed. So anyway, they've threatened before and have done nothing. I think that happened when President Trump took out that hero general from the Revolutionary Guard when he was in office. They didn't retaliate, but I think they're going to. So, it's a backdrop for. That's why I have a hard time, even though technically, I see, a reason for a pullback is to, if it happens, let it happen instead of trying to play it, because one missile, and that trade's over.
Seems like Iran just talks a lot, but
I think we were all looking at the possibility over the weekend, but there's one thing that's also occurring in the next day. It's the end of Ramadan, and I think the risk period is not over yet. If we get through Wednesday, Thursday, then we may possibly get some more like ignoring the risk, or I'd say, and it's perhaps already kind of happening in the market right now because the metals are coming off. But I'd say we still have a quite big risk couple of days there.
So solar eclipse, end of Ramadan, crazy things that have happened. We got ECB this week. We got a couple of other central banks. Let's talk a little bit about these central banks. And this is the point. I'm not going to do Ryan's weatherman CNBC analysis this morning. Do you hear me, Ryan?
Yes, I'm ignoring you.
All right. No, I'm gonna say this. I just want to put this out there. Rate expectations continue to dwindle for the U.S. So you've gone from 6 rate cuts to 3. What is there, a 50-60% chance that we cut in June? That's dwindling. And what's increasing? You've got the ECB this week. They're probably going to be fairly dovish. They're going to lean into June, maybe even back-to-back cuts. You're going to start to get more of a dovish hint from them. You got the RBNZ, so you got the RBNZ that's probably going to lean into being more dovish this week. You got the Bank of Canada that just got a real crap jobs report on Friday. And we all know, and we've seen the data, that the Canadian economy is really starting to show some signs of weakness. They got a lot of cracks at the surface here. They're probably going to lean in more dovish. So when you talk about FX markets and you think about where interest rate expectations may shift, you got more hawkish shift with the dollar, and you got more dovish shift with some of these other central banks. So if you want my opinion, we actually have to start looking for some dollar strength this week. And that's why I last week I was really hoping that the euro could spike above this 108.80 level, which was a 618 retracement. You can see it here. I was hoping we would get above there, closer to 110 to sell into. I'm starting to worry that we might not. And, we might have to start thinking about an idea of, as long as this euro dollar stays below 109, we need to be on the short side of the euro. So and on top of that, you got yields that are rallying. So I want to just point out that interest rate expectations are what is the biggest driver of the currency market predominantly. It's the underlying mover. And when you have 3 central banks this week that could really lean more dovishly, and we have more hawkish rate expectations moving forward, and I think some of us might walk away after the CPI data this week. We could really walk away on Wednesday thinking, shoot, are we even going to get 2 rate cuts this week or this month or this year? Excuse me. I'm sorry. But if that happens, you get stronger CPI, and, these other central banks that are, especially like the ECB, they lean more dovishly. You can see the dollar really, make a move this week. So I think that's your non-weatherman analysis, right, Ryan?
10 seconds to the data, Blake.
There's no data coming out today.
No, I'm
Is there?
trying to pull your plums too.
Oh, okay. Yeah, just kidding. But obviously joking, all jokes aside, the fact of the matter is that I think that this week you could see some really big expectations, and changing. So just keep that in mind. And the perfect person to talk to about this is Dale, is your guest today, Mark Chandler. So I'm glad he is here today.
Yeah, I'm always glad to catch up with Mark.
Yeah, and so I just want to say, Ryan and K-Man, I missed the flow show, and I'm sorry I missed it because I just wish I got up at 2 a.m. to listen to it. But if you guys are up in European hours, you should be listening to Ryan and K-Man every day. Also, make sure you check out, if you missed it on Friday, we did launch our one-on-one sessions. I've been actually fielding questions this morning as soon as I got up. So, check us out right on ForexAnalytix.com. It'll take you over to the coaching site. You can see all of our different mentors that we have, all the coaches from our team. Remember, prices do vary from coach to coach, so check that out. And we have obviously a special that's running until Wednesday because this is our brand new thing that we're offering, and it's the first time that we've done it here at ForexAnalytix. So check it out. And Dale, thank you so much, and have a great interview with Mr. Mark Chandler.
Oh, there's no doubt about it. We will, right, Mark?
Hope so.
Good morning, Mark.
We'd be breaking trend if we didn't. Right? Anyway, how are you, buddy?
Surviving.
Okay. All right. I know what that means. So why don't we just start off with talking about your expectations for the ECB this week?
Yeah, I was listening to you guys chatting, and I find myself really in agreement with Blake, except about the eclipse. I don't really know how to factor that into my analysis, but I do think that this could be the week the dollar breaks higher, partly because of the CPI, partly because of that divergence. I think I agree with Blake that it's hard to imagine how the ECB is going to be hawkish. So that gives us like an asymmetrical bias towards a softer ECB, confirming or boosting the ideas of a ECB rate cut in June, while the CPI is going to likely push us in the other direction. And as you guys were noting, the market has really scaled back from Fed cuts, whether it's in June or even July, is not even fully priced in yet. And what I'm thinking too, to me, it's not so much about the eclipse today, but that the Japanese Prime Minister is on his way to the U.S. There's a summit later this week. And I just think that the odds of intervention seem to be relatively low. Could the Japanese really intervene as Kishida is in the U.S. or on his way to the U.S.? I think it looks like an insult to the U.S. for him to do so, partly because the Federal Reserve is saying we're still not sure inflation is going to come back to target. And a strong dollar, we know, is part of that anti-inflation efforts. And so I think that if we're going to break above 152, I think today, tomorrow, this week is going to be it.
Excuse me, Mark. So we're going to have this battleground. They're not going to intervene. So when we take out 152, you have any kind of upside objective for how far it's going to run before they either raise rates or spend billions like they did, back here. I mean,
isn't that kind of interesting?
They did have wouldn't you have considered this, which happened last year, a successful intervention, even though it's back here at new highs? I mean, they did move the market pretty good. And
what I find remarkable is that I don't think the Bank of Japan intervened last October. I think what was happening then was that there was this idea that the Fed was going to pivot, and we saw a sharp drop in U.S. interest rates. Where they did intervene was in October 2022, and that was in that record size. And so that's what I'm sort of marvel at central banks' ability to control that And when it comes to the Chinese, we always, there's all these like narratives about all this like hidden intervention, stealth intervention, these secret reserves, and yet when it comes to the Japanese, we can accept that they try to time the market, that they didn't intervene last October, that the fear of intervention might be more powerful than intervention itself. So I think if we go above 152 in dollar yen, I think it's like a dam bursting. It's hard to talk about resistance to me when we haven't seen these levels for 30 or 40 years. And so I'm thinking that just sort of momentum and just having that dam break could bring us up to maybe 155 or so. But I think the play is, when will U.S. interest rates peak? To me, that's the key driver of dollar yen. I know sometimes we get a bit nervous about what the Bank of Japan will do, but we're still talking about the Japanese having the lowest interest rates in the world. And so I think that there's been some effort to deflect some of that speculative attention as a funding currency away from the Japanese yen. And that explains, I think, why the Swiss franc is so low.
Okay, Mark, I teach this thing called a 3-drive to a top formation, and I've been looking for at least 61.8 on the 10-year. That's in the 450 range. But at the highs, we did confirm last October's high, and why can't we challenge last year's highs? Because I was talking to K-Man this morning about the 2-year. And the 2-year has a formation that it's breaking out of right here that measures back to the highs. 410, call it 470, tack 60 on here. You're back at 520. And that's where funds are. It's almost like the market is coming back to where funds, the traders, the market, not Fed speak, that the market is starting to price in. We could go back to the yield levels we were at in last October.
Yeah, I mean, I think I think you're right. I mean, that to your point earlier too, on the earlier chat about just the supply coming in, I think we've got a little bit more than $109 billion of new coupon supply this week. And so there's a concession built in, but you look at what's happening, it's almost like, I want to say, like almost American exceptionalism, right?
Yeah.
Europe is stagnant for all practical purposes, even though I saw those German industrial production numbers, and maybe they'll eke out some growth in Q1. But Europe is practically stagnant. I mean, we're talking plus or minus 1 or 0.2% of GDP. Japan's had some problems since the earthquake on January 1st. We're all familiar with China's problems. And that leaves the U.S. growing again here in Q1 above trend growth, strong productivity. And it's hard to imagine, if the economy is growing faster than the speed limit, it's hard to imagine how we get inflation much lower. And so I think that that divergence, European inflation is falling. It fell more than expected. We saw last week. And so, yeah, if you tell me that U.S. yields are headed up a bit higher from here, I can see that. And I think that's what helps underpin the dollar.
Okay, so really cable as of late has a weaker pattern than the euro. And euro, you're pretty good at calling things. So with your narrative, here's a euro. Do we head back to some type of get close to the lows that we put in down here, maybe trade down towards 106?
Yeah, Dale, this is like, for me, this is the challenge, I think, is that I had the euro coming off. I thought we might have stopped a little bit above here, but now that we've gone through that, tested that 107 and a quarter so last week, I think that what do we do? I mean, I think that the thing that strikes me about your chart, the same kind of thing I was looking at with mine, is that some of those extremes are around two events, two data points: U.S. non-farm payrolls and CPI. And so we got to get past the CPI this week, but I think that's where we're headed. I think we break 107 and we go back to around the 106 area.
Okay, so we're in great minds, Mark. Anyway, kindred spirits, something like that. All right, so
scar tissue.
Yes, wounds. You know what scars are? Say to me, you have character, because it's. I did an interview with Schwager, and I forgot one of the wizards said something very compelling to me. And a lot of people just want to bury it and repress it. And this guy, I forgot which wizard it was, said, embrace your failures. What do you
Yes,
think about that statement? I've
it's
had a
very
few
much.
to embrace.
Yes, I think it's very much like Warren Buffett says, you have to love your losers. And I think
Yeah.
that that's really the lesson that I take from just my experience in the markets, both as an analyst and trading, is that the people who make money in the markets don't make money because they're right more often. We want to be right, of course, but people who are right more often don't necessarily make more money. The key, it seems to me, and this is what I think when I listen to your guys' shows, what I really take away from me is that it's risk management. The people who make money in the market are just better, disciplined risk managers than those who could be right more often, but on the calls, stronger, weaker jobs data, what the Fed will do or won't do. And it's really about the risk management and taking care of those losers. And what I find people typically do is make a little money, make a little money, make a little money, lose a lot of money. And we need to avoid that. And the way to avoid that is that disciplined risk management, not having those big losses, not having those big drawdowns.
Yeah. The bad trades that you don't take because you're patient does affects your P&L more than anything else, and it doesn't show up unless you didn't avoid it. So
yeah, it reminds me of a story Dennis Gartman used to tell me that I think his wife was his accountant, and she noticed that one year he had made
went over his P&L every month. Oh my God, what happened there?
He said
anyway.
He said that she came to him once and said, you had more losing trades this one period than you did before, but you made more money. And the lesson there is take your losses.
Right.
And so I think it's like I say, I mean, winners can take care of themselves. Of course, you have to manage that. But the real challenge, I think, for us is really that disciplined risk management, minimizing the losses.
Yeah, it's a one mistake business. If you start hearing in your head, I think I'll give it a little time. So when that registers, I'll give it another day. So if you hear yourself say that, you need to get flat.
Yeah, we used to talk about those stops you'd give in the market, GTC, good till close. And when the market's close to it, you move the stop.
Yeah, I called it CIC, cancel if close, but that's good. Mark, have you been thinking about, this tremendous run to gold and, what's happening in the Middle East and threats there? I was talking to the community, and when President Trump took out that leader, they promised retaliation when he was in office. Do you think people are saying they're just speaking to a domestic audience? I don't think so. What are your thoughts with what's happening in the markets? S&P whistling past the graveyard if we're about to escalate in the Middle East, but at the same time they're talking about a hostage deal. Where's your head at with all that stuff going on? Just ignore it and trade your charts?
I'm kind of like very confused, to tell you honestly. Usually when the dollar is bid like this and U.S. interest rates are bid, you typically don't have this rally in gold that we're having. And that tells me the buying, and you can see this really, that the money from in the gold ETFs is leaving, even though as gold bullion rallies. And so it tells me there's something unusual going on. It tells me that the buying of gold is not coming from people worried about the U.S. federal deficit or things like that. It's coming from people who actually want the bullion instead of the ETFs. And that excludes, I think, then a lot of U.S. retail. I think the buying is not just coming from central banks, which everybody likes to talk about, the Chinese central bank. But when you really look at how much the Chinese central bank has bought, and they've been buying for I want to say a year and a half or so, it's relatively modest amounts compared to over $3 trillion in reserves. But I think that, with the property market bubble still deflating in China, with not a lot of confidence in the stock market, capital controls, I can see how Chinese savers are buying gold as a way to avoid the weakening of the RMB, as a place to store, just to store their savings. And we
Is it
know other
legal for them
countries,
to do it? They could do that, right? They could buy
they can do
those.
that. It's very regulated, but you can see that the price of gold in China is actually higher than world prices. And that's reflecting the capital controls and the limits they put on there. But I think that you'll see this also, India buying gold. You show me a central bank that is having challenges, like the Turkish central bank, Hungarian central bank, and I think that's where I'd be looking for the likely suspects for buying gold. But I think to Blake's point, it's not just gold, it's not just oil, which you could say oil is about.
Right.
Partly it's about the Middle East disruptions. Partly it's about Mexico cutting back on their exports. Venezuela being sanctioned again. Strong demand, whether it's from a Chinese PMI coming in stronger than expected. So it does seem that obviously gold and the metals are well bid here. But
Even
like I say, I don't
copper,
think
even copper's had a breakout, which
yeah,
is
but
people, but that's different. I mean, I call gold the metal of destruction, because it's usually being bought during that destruction, and I call copper the metal of construction. And it would imply growth or just shortages because they can't get new mines on. How do you equate copper's nice move with China still languishing?
Yeah, so I think that what's happening to me, the story with copper is not like what we've seen with gold or oil, but it's much more on the supply side. My understanding is China, as we know, in many industries, has overcapacity, and there's some attempt to rationalize. And there's a lot of talk that China's copper plants are going to be scaling back both the fabrication and the buying of the raw copper. And so, to me, copper is what's going on here. It's still China driven, but it is cutting supply rather than stronger demand.
Okay. Any view on China? There are some people thinking it's going to come out of here.
Yeah, I mean, I think that here in the U.S.,
and
we tend
you
to.
still think the yuan is a good choice for the carry trade? I believe you said that
Yeah,
last time we were together.
Yep, for the offshore RMB, yes, a funding currency, partly because it's accessible, interest rates are low, and it's clearly in a downtrend. And so things like being short the offshore RMB, being long whatever you want, like treasuries, emerging markets, something like that, has some advantages. I think that in the U.S. we act better when we think someone's about to eat our lunch. You remember, like Dale, I'm sure you're old enough to remember it when Kennedy runs for president against against Nixon. He's claiming that General Eisenhower, had left a missile gap, that the Russians were getting ahead of us. And now we have this thing about China is eating our lunch. And yet I see, despite the U.S. trade deficit, despite foreigners owning more U.S. assets than Americans own of foreign assets, America has never been wealthier than it is today. I know we have distribution problems in the U.S. of the income disparity, wealth disparity, but the fact of the matter is, in aggregate, China hasn't eaten our lunch, and we're wealthier than we ever have been in American history. So I think China's got its own problems, and but I do think that we've sort of oversold the Chinese story as China's. We're pulled between China producing, being the factory of the world, overcapacity on one hand, and then we say that China's economy is collapsing, or that, as Treasury Secretary Yellen did, sort of arguing they need to have an all-new economic model. And so I think that we're on war footing with China, and I think that's partly what's going to happen this week when we have both the Philippine president, the Japanese prime minister in Washington. I think it's going to be focused mostly on security issues and increased security between and cooperation between Japan, the Philippines. Down the road, maybe even South Korea gets pulled into that. Maybe it's the Australian, UK, US submarine deal. These are all growing defense treaties and alliances in this very troubled part of the world. And that doesn't even mention about how the Iranians may retaliate.
Yeah, that's what I mean. There'll be signs in the heavens, wars and rumors of wars. It feels like, revelations to me. Anyway,
I'm glad you didn't say it felt like an eclipse.
oh, well, you know what? I have a suggestion. I did an interview with Chris Carolyn. Do you know him? And
No, I'm
just
afraid of.
yeah, I had yeah, he won a Dow Award and everything, Spiral Calendar. He does lunar stuff and tides. And it sounds, like it's, well, at the very least esoteric, but it's amazing the amount of turning points that happen on days like this. And I tell a story. Before I moved to San Diego, I rented this like mobile home near the ocean in Carlsbad, and I was sitting there one day, and there was a solar eclipse, and it was the exact high of the dollar. So anyway, today I'm thinking it might be the metals. So emotional markets can reverse into these events. That's but it sounds crazy, doesn't it? But there's a million ways to skin a cat, isn't there?
Think we all have our own tools and techniques. I
Yeah,
stick to the fundamentals, and I too see the risk of a
yeah,
breakout, not because of the lunar or solar position, but just the sequence of events, the
yeah,
divergence, almost a U.S. exceptionalism again.
yeah,
Kishida coming to the U.S., making it seem to be unlikely to have intervention. I think they missed a tactical opportunity over the Easter holiday to have intervened to knock the dollar down. So when we do
yeah.
get this strong jobs data, CPI, that has there's some cushion before you have to test that 152. Like I say, because we haven't been above 152 in a generation, who knows what's going to happen on the other side of it. My guess is it's worth a couple percentage points, but we'll have to see.
Yeah, and I know that people enjoyed this interview because normally, if I'm having a good time and I'm learning, and I heard a lot of interesting commentary, Mark, from you today on gold and on things that we normally don't talk about. And I know Blake interviews you a lot. I think your Mark is a must follow, especially new people that aren't aware of him. Most people are that have been around for a while, but your your perspectives are elite and important, especially if people have an open mind, and they're grounded in your technical work.
Thanks,
So
Dale. I think
for
that
reaction, yeah,
Yeah, I think that that's the problem. I think that, when I first got involved in the industry, there was a big split between technicians and fundamentalists. And I think that trading is so difficult. We need to have all the tools in our kit that we could possibly have. More is better. And but also, I often feel a bit like I can sympathize with what Thomas Edison said once. He said he didn't fail. He found 10,000 ways it didn't work. And so
yeah,
again, it sort of gets back to your point about what do we do with these our losers. And I think it's like to embrace those losers because I find this true. When we're right, we're not really learning anything. We made our hard work, and that's the reward for it. But it's really when we're wrong, we're able to learn new things and learn things and from experience. And so that's why I think that the just the value of being experienced in the markets, getting that experience, and learning from our mistakes, and hopefully learning from other people's mistakes.
okay. So you have your own. You created your own world currency index. Is it tradable, or you just use it for an indicator?
I use it as an indicator. This is a GDP measure of
Okay,
so it looks like the 12 biggest economic zones, their currency. So the Eurozone counts as one currency. What's interesting
okay.
is that half of that world currency index by GDP is from emerging markets now.
That is
And so
really interesting.
yeah, and I find that if you're interested in, I find that it's highly correlated to the dollar index, ironically. And for me, I've been able to get some good medium-term signals from it, from just a general sort of general course of it. And that's why I'm thinking that the dollar index, which some of you may trade, I think we're at our way to 106 and possibly even 107.
I yeah, 106.70 or so. There's a count. Mark, scares me when when many people agree with me, but not. It doesn't scare me when you do. It actually gives me more conviction. Actually, Mark, great interview, buddy. You did it
Well,
again,
yeah, good
huh?
luck to everybody.
Yeah, Mark, thanks so much. I'll talk to you in July. I hope, I want to thank you. We've been talking all the way back to FX Street days.
Yeah.
And yeah, so it's probably been maybe a decade already. So if I haven't, I want to thank you for you always coming in and giving people great things to look at, consider in today and looking ahead every time you're here. And you're also a very good teacher because your analysis um, gives people an idea how it's not mainstream, when you talk about um, why gold is going up, that it's, Chinese population uh, doesn't have really another alternative. So that was really an interesting insight. So um, thanks, buddy.
Thanks. Good luck to everybody.
My trading warrior brother, Mark Chandler, you got to follow him. Go to his website with Bannockburn Global and follow him so that you're in the know and you have different viewpoints than what you're hearing from everyone else. And that's a wrap for me. Uh, People thanking you, Mark. Everyone stuck around for this. And uh, if you're not growing, you're dying. So keep learning. And you could join the team in 19 minutes on the morning edge. Good luck today. My candidate for the Eclipse Peak is gold. It might work. How about that? Broken clocks are right twice a day. And don't just count your pips, count your blessings. Adios, everyone. Good hunting.